Hey, welcome back, everybody. We got another weekly webinar on deck for you. My name is Patrick, and as always, we're just trying to provide some education and a little different angle here on these markets. Keep in mind, everything is for example and education purposes. Make sure you know your risk tolerance going forward. Let's look at corn. Here's that weekly March corn chart. We have the two dashed lines, really key support and key resistance. End users down near that 470 in the near term, probably a buy area. Look to hedge some needs. Producers, you get up near 5, more of a resistance in a sell area. As you can see up above with that white box, that's kind of if we run into a South America weather issue. That's kind of that 520 to 550 area where the market could go. But keep in mind those first two levels, those are a lot more near-term key levels in here. And depending on your risk tolerance, you might want to consider making some decisions at those price points. Going over to the new crop side of things, this is your weekly December continuous chart. Dees hasn't fully come off the board yet, so we don't have the 24 on there, but it's around $5. Those blue bars are the ending stocks, U.S. ending stocks. They're not to scale, but you can see some placeholders on here. And the overall point is that we just do not spend much time above $455 when you have U.S. ending stocks north of 2 billion bushels. So again, keep that in mind as you're starting to make new crop sales decisions. This $5 price is pretty attractive. You might want to be a little bit more aggressive here on the corn side of things. Going over to wheat, this has been a hot market in here. This is the March Chicago chart. We had a really nice up move, about 70 cents there from the contract lows. Guys, that you have to reward that, or I shouldn't say you have to, but I mean 70 cents up, that's a rewardable rally, especially if you have old crop wheat sitting around. That's not to say this thing can't continue. Okay, we looked for a good pullback. We got that. We're bumping up here a little bit today. We need to clear that 650 area if we want to call this a good trend. So you get near 650. If you missed out on the last sale, you might consider taking a little bit off there. We don't know if it's going to break through or not. If it does, you're probably looking at somewhere in the $7 area. That's what this white box is all about. So if we can get above 650, those are kind of your next sales targets in here. Again, make decisions up when prices are good. You don't want to be forced making decisions, as prices are coming down. Here's the July Chicago wheat weekly continuous chart. We just wanted to contrast this, compared to say corn, where, the U.S. ending stocks are bouncing back over the last year, but they're still down quite a bit, as you can see, compared to like 2016. And so we probably have some support in here around $6 wheat. But again, don't get greedy. If you get into that $6.97 area, it's probably a good place to get started. The world loves to plant wheat, especially at these high dollar figures. We can certainly go above that level, but again, we got to have a plan in place and know some price levels, where there's going to be some resistance out there. So again, above 650 into 7, you get close to 7, I think it's worthwhile making some starter sales. Those are good numbers to have. Let's wrap this up real quick. Again, this was all about knowing your support and resistance areas, and along with that, know your risk tolerance. If you're a person that has less risk tolerance, you need to reward these little rallies into near support. If you're somebody that has more risk tolerance, okay, like let's say on this wheat, okay, maybe you bypass selling at 650 because your risk tolerance, you can handle if this thing, the risk to reward, if you will, if it's going to go to 7 or not, okay? But that's up to the individual. But what we want to do is just paint some areas of where, you should be considering some sales. Again, too, if you've got corn and wheat, I would say based on these charts and the ending stocks numbers, maybe be a little bit more aggressive on your corn sales and a little bit less aggressive on your wheat, or use an option strategy on wheat and do cash on corn. Try and diversify out your sales based on, some of the fundamental and technical patterns that are out there. Guys, another key point, know your cost of production. This is what makes it so much easier to reward sales and at least provide you with some flexibility. If you're selling Dees corn around 515 on new crop and your cash is 475 on 200 acres, that's 950 an acre. That's good numbers to work with. If you get a bunch of corn, let's say sold at 950 an acre, you now at least have something to work with that if you do decide you want to re-own, you know what kind of wiggle room you have between your cost of production and what you've already made a sale. So maybe you're willing to risk an extra $25 an acre because you know it won't run you over. This is how you start to remove emotion from decision making and just use the charts and plan ahead. And lastly, we cannot stress this enough. You're going to be wrong. Everybody's wrong in the market at some point or another. Remember, we always have the left side of the chart information, hindsight of what we could have, should have done, and we use that to start to set some plans ahead. But if you notice, we don't have anything to the right. The future is unknown, so we have to make decisions based on what history tells us and what we think the potential of the future will be. Eventually, that right side of the chart will get filled in, and we can all get together and figure out what we should have done different. So at the end of the night, make sure you can sleep well, knowing that you've made some good decisions out there. If you have any questions or you need some help with your marketing, feel free to reach out to us. We have our link to our website below. We're more than happy to help. We appreciate you subscribing. Hit the thumbs up button, and let's have a good start to the 2024 year.